The following material is presented for informational and sales purposes only and represents our understanding of generally applicable rules. It is not intended and does not set forth solutions to individual situations. New York Life Insurance Company, its agents, or employees may not give legal, tax, or accounting advice, and none is intended nor should be inferred from the information herein. Clients should consult their own professional advisors prior to implementing any planning strategies. This material includes a discussion of one or more tax-related topics prepared to assist in the promotion or marketing of the transactions or matters addressed. It is not intended and cannot be used by any taxpayer for the purpose of avoiding any IRS penalties that may be imposed upon the taxpayer.
You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here at 1150 AM KKNW, the Saturday, May 14th show. My goal is to keep you up to date on the latest news and trends in our local economy. Keep me tuned in and I will keep you informed. You're listening to, or if you are listening to my show at a different time or day, you are listening to a rebroadcast. You can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to discuss anything regarding your money with the guests that I have in here in studio with myself, your show host, or any feedback or on guests that you'd like to have on future shows. I always love hearing from you, my listener. And in studio right now, I have Tony Sablan with New York Life Eagle Strategies, and he's going to be addressing the 6 key areas of capital accumulation and protection. Tony, thank you so much for coming back and joining me in studio.
Thank you, Tina. It's great to see you again.
And a little bit about Tony. Tony is wealth advisor with Eagle Strategies, LLC. He is also the founder of Ultimate Wealth Strategies based in Bellevue, Washington. Tony works with individuals, families, and business owners to identify what motivates them, what keeps them up at night, and then focuses on financial solutions that can help make their goals a reality. He not only relies on his own knowledge and expertise, but also on the expertise of his team of specialists. His mission is to develop enduring relationships with clients to provide expert guidance pertaining to life insurance strategies, investments, and upgrading people's financial plans. Tony is also soon to be author for his financial planning book coming out in the 4th quarter of this year. Wow, I have to say, we've got one author in studio, another one coming, and your host right here, Tina Mitchell. My book's going to be out in a couple months as well. So it's nice how we're all putting our expertise in writing and sharing it. So anyways, that was a shout out for Greg, shout out for Tony, and a shout out for myself. Why not? Tony, thank you again. So good to have you back. And what are you going to be sharing with my listeners this time?
Well, we'll be talking about the 6 key areas of capital accumulation and protection.
So, Tony, you talk a lot about the capital accumulation and how one's income can play into the accumulation of assets. So talk a little bit about that.
So if my income is taken away, I am left with my assets to provide for me and my family. Right? So most of us start with nothing, no real income, and no accumulated assets. But over our financial lives, literally millions of dollars will pass through our hands. And even an individual earning $50,000 each year will have earned almost $2.5 million over their working lifetime. Many of us will earn much more than that figure. But how much of our lifetime earnings will we be able to set aside if we are not careful? Spending will consume most, if not all, of what we earn. Having a cushion for emergencies, money for a down payment on a house, and accumulating enough money to be able to voluntarily stop working. A concept we know as retirement requires us to find a way to spend less than we earn and set aside the difference. Most of us accumulate by spending less than we make and saving that difference. So some inherit, and that can help. But very few of us inherit money or receive by gift an amount sufficient so that we do not need to set aside assets on our own. So are we ever finished accumulating assets? For most of us, the answer is no. So how would that impact you and your family? Saving and accumulating are never ends in themselves, but rather tools to be used to accomplish an individual's objectives. Our clients focus on accumulating for a variety of goals, securing or elevating their standard of living, funding a retirement, and leaving a legacy for their heirs. So in that regard, if your income is reduced or eliminated, right now, what would happen to you and your family's standard of living?
So you mentioned capital risk from another key area of accumulation. So would you elaborate a little bit more on that?
So generally, capital risk includes individuals who own a business. So for the business owner, a number of different factors impact or influence decisions. Most business owners are active in their business and are trying to build and grow an asset that can be their primary source of income, provide for their retirement, and have value for their heirs. As an active employee in the business owners are concerned about the impact of their death on the continuation of the business, their family who depends on the income that comes from the business, co-owners or partners that are in the business. So as the business grows, business owners worry about having sufficient cash available to fund growth, increased income taxes as they become more profitable, having the majority of their assets related to or tied up in the business, and recruiting and retaining key employees that can help grow the business. At some point, they think about transitioning out of the business or retiring, so they worry about selling the business or bringing in successors to take it over, maintaining sufficient income for their lifestyle without diminishing business revenue. And all along the way, if they believe they have created an asset which can provide a legacy to their heirs, they think about how to best transition the remaining value to their heirs. So in order to be adequately protected in this key area, you got to answer, how would your death, disability, or decrease in revenue impact the continuity of the business, your family that depends on its income, co-owners or partners that are in the business? How would your business be impacted if your best employee left? And what is your strategy to exit or transition from the business?
So great advice, Tony. And, it's tax season is pretty much over for individuals until next April. So we got another year. And my birthday's in April, so I always get to deal with taxes for around my birthday. That's fun.
Well, that's got to be fun.
And income tax is another key areas that people should take into consideration. So what are some general thoughts, ideas on income tax?
So income tax planning uses various techniques to reduce taxable income and minimize taxes. Devising a strategy to reduce income taxes means first recognizing that income taxes can occur from one of two sources: wages earned from our efforts or income earned on our assets. The source of the income will dictate the strategies available to reduce the tax. So which type of income is causing you the most concern right now? Income tax planning is trying to predict future tax rates, but rather designing strategies that minimize current taxation, provide tax diversification in order to maximize future flexibility. And most people are focused on reducing taxes right now, but sometimes it pays to take a step back and ask a couple of fundamental questions. Which direction do you think income tax rates are headed? What factors could impact that direction? Is it the budget deficit or surplus, world events, demand for government spending? So why is that an important question? Well, let's say you're in a 25% tax bracket today and take a current tax deduction. That saves you $25 today for every $100 you can deduct. That's pretty nice, right? But when you take that money out to spend, let's say 20 years from now, your tax rate might be 50%. So was that still a good decision? Perhaps, but it depends on what other options you had 20 years earlier. So what if you could have paid the tax, but then placed the money in something that only grew without tax, but the entire amount could be taken tax-free? Wouldn't that be nice?
There are a lot of great opportunities when it comes to money, and it's understanding which is the best options for you, and consulting with an expert can kind of guide you through that, because I believe that there's no best program, there's no good program, bad program. It's whether it's the right program for you, and that's what makes it good. So, Tony, many people focus on accumulation of assets, and I see that asset protection is another focus point for you. So how does one think about protecting their hard-earned money?
That's a great question. And asset protection is really using legal methods to protect assets from creditors and predators. So what are the most common threats to the asset that can be protected? That's lawsuits, judgments, and creditors are the largest threat to an individual. Most clients who are in high-risk occupations know they have a threat. But they may not have thought about exposure beyond themselves. So for their heirs, inherited assets can be exposed to divorce and remarriage, mismanagement or wasteful spending, and estate taxes. So this is an area where asset protection and estate planning intersect. And there are really three basic strategies to protect assets. There's exempt assets. Some assets are exempt from creditors under state and federal bankruptcy provisions, and federal bankruptcy and individual state laws provide different and complex asset protection provisions. There's change of ownership. Most common third-party ownership would include corporations and limited liability organizations and irrevocable trusts. Insurance is also another protection strategy, also available and could be an essential part of any asset protection strategy. But all policies have limits of liability that might be exceeded. So in order to be adequately protected in this key area, you have to answer these key questions. What is your greatest threat in this area? What options do you have to use to exempt assets with assets that are not currently protected? Have you considered forming an entity such as an LLC to provide additional protection? And do you have assets you do not think you'll need that you can shift to a different owner, such as a trust?
Got it. And Tony, we've talked a lot about some key areas for respective planning and how that affects. So how does that affect retirement?
So retirement used to be the time that we quit working and lived off our savings. And traditional retirement is a time where an individual voluntarily stops earning an income and instead relies on income generated by the assets they have accumulated during their career. This step has two sides: time before getting ready for retirement and time after enjoying retirement. But traditional retirement, as we all know, may be a thing of the past. Surprisingly, though, retirement is still top of financial mind for most Americans. And according to a Gallup poll in 2014, it's the largest financial concern for 70% of the working population. But now, 81% of the working population plans to keep working after retirement. In other words, the traditional retirement is not happening for many people. And some of the factors that impact these statistics are a shift away from employer-sponsored retirement benefits, such as a pension plan, difficulty many have in saving enough. I know in the Seattle area it's quite pricey, so people are stretched. And relatively, there's mixed investments results over the past few years. There's low interest rate environment and a volatile stock market. So these trends all have made an impact on planning for retirement. And if they persist, it will change the reality of retirement for many. So you have, to be protected in this key area, you have to ask yourself, how much do you need? How much will you have? And how much more do you need to set aside? And where should you put it?
So, Tony, I've got a minute left to wrap up the show here and leave my listeners with a final message to help get them to a place of closure in our conversation with finances and preparing for your financial future.
So, it doesn't end at retirement, and estate planning usually comes next. So if I have to leave you with something, it's estate planning could be defined as directing the right property to the right people at the right time. So as you think about your comprehensive financial plan, I would encourage you to be more intentional with your asset accumulation strategies, keeping in mind how you address income protection, capital risk, income tax, asset protection, retirement planning, and estate planning.
Wonderful. Tony, thank you so much for sharing your expertise with my listeners and coming in and talking money, because money is what we need to protect our families.
Thank you, Tina.
And this is your host and mortgage expert, Tina Mitchell, signing off for the day, but I'll be back next Saturday, same place, different guest in studio, but I'll be here 11:50 a.m. KKNW right here. Have a great weekend.